Good morning, ladies and gentlemen. Welcome back to your morning watch list. We got a couple things to run over, a couple penny stocks. We'll touch on the stock SPI, major indexes, as we normally do. So we'll start here with SUNW, or actually, we'll start here with SPI. And as many of you guys know from watching yesterday, I had been talking about, being a short early pre-market if the prices reached 4. And then you can see there was a short trade yesterday around $4 that you could see ended up squeezing out. So really a lot of what happened yesterday was some short selling that turned into a lot of short squeezes. So again, that's what we kind of call a short trap, right? We had a short move that did not end up breaking down, right? And it held, and that's what causes the squeeze. Same thing here. A lot of people going bearish, does not break down, causes another squeeze. So yesterday, SPI just made some ridiculously insane moves. I didn't actually trade I didn't trade any of it. I ended up taking off yesterday about 10:30, went golfing, and sure enough, later in the day, that's what you see happen. So, unfortunate, wasn't around for that, but nonetheless, it had a really, really crazy move. So if we go and look at the daily chart, we'll probably find some interesting things. All right, well, the price jumped so much that it doesn't really matter. Yeah, so for right now, price targets on SPI are down at $7. So we're pretty much just anticipating prices are going to return on SPI back to the $7 mark because that's where trend is at. If we were to look at SUNW now, this was a stock yesterday that started jumping because of SPI, right? Same thing here with POLA. This is a stock that started jumping yesterday because of SPI. So what these are sympathy plays. Essentially, this is where a stock similar to another stock runs because the other stock ran. So again, these are sympathy plays and usually won't be anywhere near as strong as, say, something like SPI yesterday. So we got a lot of traders hopping in on these because of the moves that started yesterday, because of the other stock SPI. Again, with that being said, these usually aren't the most reliable stocks to continue holding. So for right now, if we go to the 4-hour chart, you can see we've kind of battled the 4-hour trend here. If you look at the daily chart, I believe it's a little higher. No, it's a little lower. Okay, so we've come up and we've gone over the existing trend, and really the only thing you have to go off of is previous price action here at 496. Okay, so you can see prices have gone up to all these levels and we've really sold off. So it does appear like pretty much anything over the $5 price is a good selling location. Even above this 437 is a good selling location. So for me, not going to be very long biased the stock unless obviously it forms up into some sort of good pattern. It's bouncing off support. So for right now, there's really not a whole lot that I have to say about this other than we have statistical trend down here at 346. You have your pullback support in here at 423. Again, there's really not a whole lot to go off of here for me. And if you look at this chart pattern, in theory, this is a first move up. We've come down, we've pressed back up to resistance. In a typical world, this wouldn't break out. In a very lucky world, this would actually break over the 5. So I know there's a lot of traders that are probably looking for a move over 5. To get that move, it would be pretty lucky on the day, or say over the 540 high here pre-market, it would be, again, pretty lucky. But hopefully it happens. Never know. SPI went crazy yesterday. But again, I just don't see these having those moves. But if they do, that's fantastic, and I hope it happens. Next one on the stock we'll talk about is SUNW. So again, SUNW, same thing. Big move up yesterday, crash, then a move up this morning. All sympathy to, again, SPI. Same concept. I don't really see this running too much. Well, actually, this one probably has a better chance. Well, I can't say that. Yeah, again, I wouldn't trust. I don't trust either one of these, to be honest. Right now, we have trend down at 421. So, say the stock rolls over, crashes all the way to 421, we could look for a scalp bounce down in the $4 to 410. Excuse me. So again, we've gone from low cycle to high cycle. Now we're coming back into the average, which is about 4. So based on the way that things would typically move, I would suggest that we're probably going to decrease down to 4. And, if we do, there's probably a good chance we'll see a little bounce action down there in the $4 price. So for now, pretty much on standby, not really crazy about this. We can see we've had some very choppy action so far this morning. Now, I'd probably have more confidence in both of these stocks if they're running on their own catalyst, their own news catalyst, and they're not running because some other stock made a really good move. So that being said, there's going to be a lot of people watching SPI today. There's going to be a lot of people watching Sunw and POLA. Again, they're pretty sketchy, but there's probably going to be some moves here. Something I could see, on the long side potentially happening is if in the event we keep holding support over this $19 price, can't break it, we could throw another short squeeze, maybe back up even to 27 here would be a logical play, and then a short move off 27, and that's more like 28. So again, there's not a whole lot here with POLA, Sunw that makes me feel all that good. Because I know yesterday was a pump, then it dropped. We probably wouldn't have the same sort of momentum action we seen yesterday on SPI. Okay, so let's go forward and look at the SPI now. So for those of you that follow the channel, you will know that I was suggesting a move into the daily chart level. Right now, the daily chart level is 319. So the market did in fact retrace to 319, and again, in a market that would hold a bottom, we would usually bounce here. We have yet to successfully bounce very strong, and it does look like we're going to see this market drop out further. So we did reach our price targets on the downside from the all-time high that we suggested into the 320s, but it's struggling to hold. And again, when we successfully transfer from one side to the next, and when I say that, you can think of this being one side. So this is the upside, okay? Change that to red, right? That's the upside, and then this here obviously is going to be the downside. Okay, when we do something like that, when we go from the up through the middle, that's where we can see a very aggressive move, whether it be a drop or a long play. So be very careful. We're coming in at 320. The buyers are not acting very strong there like we would have hoped for as the prices return back to that trend. But the important thing is to note, if in the event we go through the 320s, you could see a very aggressive breakdown. So again, do keep your eyes on this. It's very interesting. Let me take this off, remove drawing, remove drawing. So yeah, we're sitting right at 319.35. Let me check the price this morning. Yeah, we got a little room down till we hit that 319, 320 price, but again, through that can get a little dangerous. Now what I want to talk to you guys about is QQQ, because this morning you can see has been sitting and fighting on this half standard deviation on the 4-hour chart, which again doesn't look to be holding all that well so far. This stock is already, well, the Qs, this ETF, has already cracked through that regression trend in the middle here, and we're starting to press a little lower. So we've really just been seeing this market bleed out. So if we keep selling off, which I kind of think we will, again, I can't think of being a long bias trader or looking for another reversal or sort of bounce play until probably down here at 238 on the Qs. Okay, and then on the SPI, it could be as low as this 295. So if we successfully snap through the middle here and get very aggressive, just basically going to target the down moves, going to go to the 295 price on the SPI. Something I haven't showed you guys in a while is this 20-year chart. If you look at the 20-year chart, you'll see that this market's been diverging bearishly for the past 3 years. So if we show you, so we've been going up on the market, and our momentum's been going down ever since for the past 3 years. Since 2017 or started 2018, essentially we've been going into new highs with lowered momentum. So high, we drop, put in a new high, lower momentum, drop. Go into a new high, still lower momentum than the 2018 peak here, drop. That was also the pandemic, right? Bounce back up into a new high, lower momentum than pre-pandemic. Again, when the RSI is like that, that essentially is indicating to you there is potentially future weakness. And for those of you that follow the channel, you know that we've been mentioning this divergence for the past 3 years. And every time we go into a new high, lower momentum, there's always a good chance you're going to see a sell-off. So that is happening right now. And it just more and more, every time we go up into the highs and then we pull back, it starts to create that rolling market, right? We've gone up, drop, up, drop, up, drop, up, drop, and that's what you need to create a rolling market. So again, to be honest, it's not looking good. We are really bleeding out in the market. And the interesting thing so far is you haven't seen any sort of news pieces, and I could be wrong, there's probably some out there, but there's really no news pieces saying that the market might crash. No one's really talking like saying this is the drop, this is going to be the top, be scared, be worried, which is the interesting thing, because as soon as something turns bearish, the market pounces on the news that it's going to be the drop. This is going to be it. This is going to be the market crash. And the interesting thing is we're not seeing a lot of that right now. That's kind of the difference between the media right now and the past ones is no one's really talking about this being the end of times, which makes it a little bit more unique. And we have yet to really see this market gain any footing too on some important levels. So that being said, we're going to keep watching this go down. If I take a look at, we'll take a look at gold, GLD here. So GLD snapped its wedge to the downside here, which is kind of impressive knowing that our government's going to continue printing money and devaluing currency. So again, like I've been telling a lot of people, if the premise of gold and silver going up is on the idea that printing money is bad, then these should be going up. There's also been a lot of talks that the silver and gold markets have been manipulated. To be honest, I would believe that. Nonetheless, I'm still long gold and silver. It's been a painful week, unfortunately, but we're going to be slowing down in this move most likely pretty soon. A couple ideas for you are going to be watching down here at about 1700 for maybe a little bounce on gold. For silver, this thing's still just basically bleeding out. We're going back down to where we previously kind of broke out from. On the 4-hour chart, we don't really have a support bounce down until about 19 bucks, and then maybe the daily chart is something prior. So daily chart, we went right through the support. Now we're down towards 18. Yeah. So, oh, we're at 20. We just broke there. All right. So yeah, I could see silver all the way down to 19 possibly before an actual bounce. But nonetheless, I'm still buying this stuff up because I know our government's still printing money and devaluing currency. And we've seen pretty much the same kind of move back here, right? Silver and gold tanked right before the pandemic, and then they ripped. So they had a market shake, and then they ripped. Right now, the reason that you can say these are performing so poorly is because our dollar, which by the way, this chart is not working right today. I don't know why. It's getting all weird, but yeah, you can see like it doesn't even make sense. So this is the dollar index right now, and it's just like the charting on it's way out of whack today. So I can't even really show you what I'd like to show you because TD Ameritrade's glitching out. But anyways, the dollar has been performing really well. Therefore, you're going to see your gold and silvers perform poorly. But again, it's hard to believe that the dollar is going to remain super strong, knowing that we're just printing into oblivion. And there is cryptocurrency plans right around the corner. And when I say that, I mean, literally, I think it happened like 2017. I mean, basically Congress and the Senate are trying to fast track digital wallets into everybody's bank accounts, by 2021 or something. So a lot of changes, in fact, happening there. So with that being said, ladies and gentlemen, that is your morning breakdown. Hope you guys like it. Hope you enjoyed that. I will see you guys in the next one. Everybody, take care.